Let's focus on Angel One, though. It reported a strong set of numbers at the end of quarter four. The company has done a healthy client addition in quarter four, while their margins as well have improved a little bit. The management in the conference call said that they will sustain their growth going ahead. So let's get straight to a discussion with Mr. Dinesh Thakkar, the CMD of Angel One. Hi, Mr. Thakkar. Good morning, and thanks a lot for joining in.
Morning.
Let's focus on your client addition. Yes, it's been healthy, but your monthly updates suggest that the gross client addition has slowed down a little bit for the third consecutive quarter. How should we view this?
I do not see any slowdown in new acquisition that we are doing. In fact, this quarter we did around 29 lakh customer, which is higher than previous quarter. And if you look at customers that we are acquiring, they are from the same kind of a demography of mostly coming from tier 2 and beyond, which is around 85 to 90% of our clients that we acquire. So overall, I see this healthy trend. Small deviation here and there, month on month can be there because March was a bit lower than Feb, but it was very high in compared to our year-on-year growth. Because when we started this year, we were acquiring around 4 lakh customer. Yes. And in this quarter, we acquired 29. That means average of around 9 lakh and above.
So you expect that sort of a run rate to keep pace around 9 lakh on a monthly basis?
Yeah, we expect that this kind of run rate would be able to maintain and continue. In fact, we are expecting an increase in run rate because now just in this quarter, we have started sponsoring on IPL, branding activity and all that. So we feel that that is going to help us acquire more customers from that area or demography or tier 2 and tier 3 that we are aiming for. Because what is important is top of the mind recall that a customer has when they are thinking about opening a broking account. So we feel that is going to help us in terms of accelerating this trend.
Okay. Mr. Thakkar, good morning. Prashant here. Good to see you, sir.
Hi, Prashant.
Just a couple of points. One, in the month of March, when you look at we get the number of DMATs account, etc., there was a small dip. I'm not talking about Angel, but I'm talking about overall industry. I mean, the rate of growth actually came off. So I don't know if you have any thoughts there. I mean, is this the first sign of maybe... or that's not really true and April things have picked up, Mr. Thakkar?
No, it is very relative. Say if you compare with Feb, it appears to be there was a bit dip. But if you compare with October, November, we are seeing sustained growth which started from December, it continues. So there can be a variance of 10% here and there because I think by November, October, we were acquiring around 6 to 7 lakh customers. And then we jumped to 10 lakh. Then it came down to around 8.5, 9 lakh. So that dip is, I would say, a regular dip in terms of cyclicity of this kind of an industry market. So clients are more active when market is going up. Small and mid caps are going up in Jan and Feb, if you remember. So this 10% impact would be there. But if you look at year-on-year growth, I think it would be quite reasonable to say this industry will grow at a good rate. Plus, digital players are going to grow at a decent rate.
Would they be? What about margins, Mr. Thakkar? If you can give us some sense there, because as you said, I mean, you're spending you will be spending, and you're in the sort of OPEX phase, a bit of CAPEX as well, right? As you build out some of the other new businesses, wealth management, etc. There is the IPL spending as well, which of course will get you more recall down the line. Will sort of top line growth more than make up for all of this spending, and what does that mean for margins? Will margins be a little subdued in 25 as opposed to 24?
See, Prashant, the way we look at is that we have to take out sales cost when we are looking at our margins, because when we spend on sales, we book our cost immediately. But if you look at lifetime value of a customer, so this time we had revealed all that numbers that when we are clocking any revenue for any year, it is a combination of vintage customers who are 1 year, 2 years, 3 years, 5 years old. But when we acquired this customer, we had booked our cost immediately in that very quarter. So there are two ways to looking at margin. One, we get an opportunity to acquire more customer. There will be an impact on overall OPM. But if I apportion this cost for 5 years, looking at the lifetime value of a customer, we would be at the same kind of an OPM what we have achieved this year. So for us to maintain this OPM of 45 to 50% is quite, I would say, comfortable. But if we get an opportunity to acquire more customer, it is an upfronted cost for which revenue is going to come in subsequent years. So overall, if somebody is looking at our model, they should look cost that we are taking to acquire a customer. It has to be apportioned for 5 years. If we do that, then OPM it is not there. But even if I take cost of branding and cost of sales that we do every year, our OPM would be within this range of around 44 to 45%, inclusive of all the cost that we are spending on sales, that we are spending on new businesses.
What's the amount that you're planning to spend on sales, marketing, branding, X of the amount that you've planned for IPL this year?
Usually we don't disclose that amount that we are going to spend on sales because it is a composite number. But we have disclosed, because IPL number are there in the market, but we have disclosed in terms of how much we are going to spend on this IPL. IPL being a new property, we wanted everybody to know about that number. And when we achieve some traction in terms of client acquisition, it is easy for us to really portion that cost or justify that cost.
Okay. So you've given us a number on the gross client addition, and you're confident that 9-10 lakhs should sustain going forward. Any other growth targets that you can share on revenues, profitability, market share, and where does your market share stand at, and how has it changed?
See, currently in new client acquisition, our market share is 23%. And when we talk about active client, which is based on NSE formula, which is client who has traded once in a year, we stand at around 15%. So what we are seeing is that when we are acquiring customers, if you take a CAGR of last 4-5 years, CAGR of client acquisition has been 77%. But if you look at our PAT also, it has grown at a CAGR of around 68%. So as I said, there's a lag effect always when you acquire a customer. But when we take a block of 4-5 years, so that client acquisition is reflected in growth. So we are very confident that we would be able to maintain a customer kind of an acquisition growth of around 55 to 60%.
All right, Mr. Thakkar, very quickly now, would have liked to ask you about the new fleet of cars that you're looking at for the year. But besides that, the street will want to understand, you have a lot of cash in books now, and you're looking at some acquisitions from the fintech space. Should we hear about it in the first half of this fiscal, or is it for the second half of the fiscal?
So money that we raised was for growth. When I say growth, it is continuous growth that we are seeing in our company. This year, when we started, we were clocking around 42 lakh orders per day. And by this quarter end, as we reported, it is 86 lakhs, almost a growth of more than 100%. So when a business is doing an ROE of around 44-45%, and growth for this kind of a year, Q1 to Q4 was almost 100%. We need capital for our existing business. Having said that, we are looking out for entrepreneurs, or we're looking out for people who have good solution for our existing customer. And it takes time. It is very difficult to say when we would be able to click any deal, because there is a pipeline of entrepreneurs or a small organization or people who have created solution for investors and all that. We are in talks with them, but when that will materialize, it's very difficult to say at this point in time.
All right, Mr. Thakkar, good luck. It's always a pleasure speaking with you, sir, and
Thank you
done a phenomenal
very much.
job with Angel. So continue to.
Thank you very much.
Hope to see you doing as well in 25 as well. Thanks indeed. Well.